In August 2020, a Silicon Valley startup called ScaleFactor announced it was shutting down. The CEO blamed COVID-19. 50 employees were gone the same day. 15 of them immediately went to Forbes. And what they described wasn't a company that failed, it was a company that never existed. The investors who funded it never checked. The customers who paid for it never knew, and the CEO had an exit plan ready the entire time. The Delisted performs forensic autopsies on companies that destroyed themselves. Last week, we covered how Wish built a $14 billion empire out of counterfeit listings and broken promises. If that's the channel for you, subscribe now. ScaleFactor was founded in 2014 by Kurt Rathman in Austin, Texas. The pitch was clean. Small businesses were paying thousands of dollars every year for accountants. ScaleFactor said, "Give us $399 a month instead. Our artificial intelligence will handle your bookkeeping, your payroll, your taxes, automatically, every single day. No waiting, no human error, no accountant." By August 2019, ScaleFactor had raised $103 million from some of the most respected names in venture capital. They were valued at $360 million on $7 million in annual revenue, and something was hiding directly underneath that number. Here is how ScaleFactor was supposed to work. A customer connects their QuickBooks account. The AI ingests every transaction in real time. It categorizes them, reconciles the books, flags anomalies, generates financial reports, automatically, every day. No human required. That was the product they sold. Here is what actually happened. The customer connected their QuickBooks account. An employee at ScaleFactor's Austin office received an email with the documents attached. They opened a standard QuickBooks spreadsheet and typed the numbers in by hand. When Austin fell behind, the documents were forwarded to a Philippines outsourcing firm called the Outsourced Accountant. More humans, more keyboards, more typing. We covered a similar gap between promise and reality when we examined how Wish convinced investors its fulfillment operation was built on technology. At ScaleFactor, the gap wasn't a technical limitation. The gap was the entire product. The problem with replacing software with humans is that humans make mistakes. Accountants under pressure to move at machine speed make a lot of them. Customers began reporting books filled with errors, duplicate transactions, miscategorized expenses, missing entries. One customer discovered ScaleFactor had credited a client account with $17,000 by mistake. It was unrecoverable. Customers were doing what ScaleFactor told them they would never need to do again, hiring a second set of eyes. The AI they were paying $399 a month to trust was producing work that needed to be audited. Now here is the detail no other channel has covered. When ScaleFactor raised its $60 million Series C, the cost of their human bookkeepers was buried under a line item that kept it invisible to scrutiny. The cost of the humans pretending to be the AI was not recorded as cost of goods sold. The investors who wrote that $60 million check never saw the real unit economics. They funded a service business dressed as a software company. Remember what I told you at the start. 15 former employees went to Forbes. That conversation was already happening in late 2019 before a single lockdown existed. In January 2020, Rathman announced the company was pivoting. They would abandon the AI product entirely and become a marketplace connecting small businesses to traditional accountants. The exact thing they had spent 5 years telling customers they were replacing. Customers kept canceling. Revenue was already falling before COVID arrived. Then COVID arrived, and Kurt Rathman had his exit. June 23, 2020, half the company is laid off, effective immediately. August 28, 2020, operations cease entirely. 10 employees remain to wind down what is left. $103 million raised, $360 million valuation, $7 million in annual revenue at peak, 250 customers at close. 1 week before announcing the shutdown, ScaleFactor was still posting job listings on LinkedIn. The AI that was supposed to replace accountants was accountants. ScaleFactor didn't fail because the AI was hard to build. They failed because they never tried to build it. They raised $103 million from Bessemer and Cotu, two of the most respected investors on the planet, without a single technical due diligence session confirming the core product functioned at all. That is not a startup failure. That is what happens when the word AI on a pitch deck is worth more than the product behind it. The company was always fake. The $103 million was very real. Next, the $8.9 billion smile that was designed to hurt you, on your screen right now.